All right. Well, today we are going over Keyman life insurance buy-sell agreements and why would an organization even want to offer a Keyman or life insurance within the organization? Why is this important? Why would a company do this? Is this a common thing to do? Do companies insure executives on a regular basis? And the short answer is yes. However, I'm going to get into some nitty gritty details because the internet wants to know. The internet wants to know about Keyman and buy sell agreements. The reason this came up is because there are some questions that I'm seeing buzzing around on the interwebs regarding the Kirk situation and TPUSA. And I don't generally want to get into the political. This is all for entertainment purposes only. This is not financial advice, legal advice, really any advice, really. This is just a conversation that I'm having all by myself in my office. It sparked my interest because many people were asking about the life insurance policy. And so I said, well, I can certainly shed light on that piece. That's what I do. And a company taking out a life insurance policy on an executive is common practice. And it is a common thing for a entity of any kind, a profit, for-profit, nonprofit, any company really making any significant revenue and has a key player, which was the case certainly here. It's very common for a company to get what's called Keyman life insurance or a buy-sell agreement. So what I'm going to do in this video is I'm going to go over what does this even mean? What are you talking about? Keyman, what is a buy-sell agreement? Why are companies running around taking out all these life insurance policies? What is this all about? And why would somebody do this? Why would somebody want to take out a life insurance policy for someone within their business? So first, I'm going to go over what is even a Keyman life insurance policy. So a Keyman life insurance policy is when you have a key executive, usually a founder, the business owner, a sales guy who has a lot of very interesting, important relationships surrounding the business, a marketer. It usually has tied to revenue, to be honest with you. Somebody that's really important for the cash flow, really important for the operations within the business is considered key man. And the risk for the company, so for the organization AB, we'll call ABC Company. ABC Company has a key man who brings in millions of dollars a year. Because of this person going out into the world, people are donating millions of dollars to an organization. That one key man would be very hard to replace. So if that person were to pass away, how much is the company going to need to spend on recruiting to replace somebody like that? I mean, headhunters charge 50% of somebody's salary. So if you're bringing in an executive that costs, let's say, $1 million a year, headhunting that person is going to cost $500,000 at least, maybe even more, depending on circumstances. And then and in those circumstances, the people that you're headhunting already have jobs. They're already making income. They're already worth money. They don't need your job. So to sweeten the pie for them to come over to your organization, you want to add in bonuses and moving. If they have to move from maybe New York over to California for the position. There's all sorts of costs that go into recruiting, is my point. More than you may think. Okay. Not only are you having to now everybody's grieving the loss of this key person. Now you're having to replace this person and spend money on recruiting and wooing someone else over, usually with money. Now you also are down, right? You're the guy that was bringing in all this money. That faucet has turned off. That cash flow faucet has turned off potentially. So how many millions of dollars is this company potentially now behind? Now, and they were planning on making, let's say, 2 million a year off this person, and now they're no longer making that, and they're having to spend 1 million to replace that person. So then it's really like a $3 million cost, maybe even just in that first year to the business that they weren't expecting. So these are all the reasons why you really want to have Keyman life insurance. If you have a key person that is difficult to replace, it is a risk for your business. This is something that is very common for people to look at, especially if there's a merger and acquisition, a sale. These private equity organizations want to ask all these questions. These are the risks that these companies, these larger companies, private equity firms and the like, do an assessment on a business before they buy it. If you have a key man, it increases the risk on purchasing a company, because what happens is with that one guy, if everything's under this one guy, and he's the only reason why people are giving you money, then that's a huge risk for a private equity firm. So anyway, these are risks, real financial risks that companies look at. So how long would it take to replace the role? What salary would attract a qualified replacement? How much revenue is going to be lost during the vacancy? Donor stakeholder confidence impact, PR nightmares and the like, right? Okay, so buy-sell agreements. This is one that I think a lot of more people maybe know about the key man, and that really, once I bring it up and explain it in a couple of sentences, most people catch on. They go, oh, yeah, of course, that makes sense, right? But a buy-sell agreement is another piece that it just sounds like two attorneys talking to each other and writing up agreements, and they're buying and selling things. Most people don't really look into this piece unless you, of course, you are a life insurance agent. You probably are screaming at me knowing all about this. And so please bear with me. Okay, so a buy-sell agreement. This is where two people take out life insurance policies on each other, potentially, or a life insurance policy is taken out with the intention of purchasing a portion or all of a company, an interest in a company, okay, because of a loss, because of a death. And this is usually tied to key man in some way, because this is when these conversations come up. We start talking about key man. Let's say this one person is bringing in all this money for this organization, and what happens when this person dies? Okay, now you have to replace them. That's what the key man's for. That's to help the company replace this person, recoup any losses from the gap between losing the person, getting a new person, and then the on-ramp to training that person and getting the new person up and running, right? Then we've got a buy-sell agreement. So let's say you have a company that's worth, $50 million. And somebody let's say the key man, this executive we're talking about, owns 50% of it. That person suddenly dies. What does the other partner do? How do you get your $25 million if that person has now passed away? Well, it usually goes to the spouse, right? Because in succession planning, law typically states that everything immediately goes to the spouse. It's kind of just assumed, right? If a beneficiary isn't filled out on a life insurance application, most states assume the spouse is the beneficiary, right? So similar laws come into play when deaths happen within businesses. And again, I'm not an attorney. This is not financial advice. I'm just a woman on the internet who likes to geek out on insurance and helps businesses with HR and employee benefits. That's what I do. So this is all speculative. This is all for entertainment purposes only. This is not financial advice, legal advice, really any advice, really. This is just a conversation that I'm having all by myself in my office. So the buy-sell agreement is, let's say if the executive passes away, it's a $50 million, let's say the business is worth $50 million. The key man owns 50% and passes away. The other 50% partner now is owed $25 million because that key man has passed away. What is the business actually worth? You have to go through and do audits typically. There's attorneys involved and forensic auditors and people assessing the value of the business. And then a number is agreed upon between everyone, and that is usually planned out in some way ahead of time in the best case scenario. And with these financial planning, succession planning kind of things, not everybody does it. Not everybody does it. Not everybody has a trust. Everybody knows we should have a trust and we should have it set up to go to our children, and it shouldn't be going out personally, and all these things that go into financial planning. But does anybody do it? Does everybody do it? What is the percentage of people that actually do the succession planning, financial planning, cleaning up your will, cleaning up your trust, making sure if you pass away, your family's taken care of with life insurance and, like I said, a trust, and you know who's going to be paying what and what's going to be paying for your funeral. All these questions that nobody wants to think about is what life insurance, succession planning, buy-sell agreements, Keyman, this is what financial advisors do. And they don't just do it for individuals, they do it for businesses. So this is a strategy. These are strategies. Life insurance is used a lot, very common, all the time, every day, within these businesses for these problems, for these issues. In case somebody passes away, the spouse has enough money to give to the other partners to get out of the business and get the cash, right? With the buy-sell agreement, let's say there is a Keyman. We'll go back to this Keyman concept. And let's say the business is worth $50 million and he passes away and owns 50%. So the spouse is then owed $25 million. How is now that company going to be paying out that spouse, right? So they have to go and do an assessment, an audit of the business, some sort of estimate on what the business is worth. Everybody agrees on it, and the spouse is bought out for that amount, right? So let's say it's 25 million. Well, where's that 25 million coming from? Some businesses may choose to continue the salary for a certain amount of time in a buyout. So it's similar to some sort of a buyout. And buyouts are a pain in the ass anyway. But this is now, the whole company's dealing with the death in the business. It's a surprise. I mean, buyouts can be a surprise anyway, but this is usually quite a surprise. And it's something that a lot of succession planners and financial planners want to talk about ahead of time. Everybody knows about death and taxes, right? And there's nothing certain under the sun other than death and taxes. And so one thing that we can plan for is death. And it's something that not everybody wants to talk about. I mean, we all know we need to have a trust and we need to have X, Y, and Z set up for to take care of our families when we're gone. We all know we're going to die, but nobody wants to talk about it. So everybody that knows that they need to do that and have a will and have all these things written out, not everybody does it, right? Even though everybody knows that you should do it, nobody does it, right? Or I shouldn't say nobody. I'm being hyperbolic. Like, that's just how I talk, okay? So I'm a little bit dramatic, so don't take me literally with any of this stuff. So I'm just trying to be funny to prove a point, and the key word is trying. So my point is that in general population, we understand that we need to do succession planning for our children and set up a trust and do all this, but we don't do it. And a lot of people don't do it. And then take that out to businesses that are earning money, that have multiple partners, should have these buy-sell agreements in place, but many of them don't. A lot of them don't, just like us out here in the real world. Most people don't have these things set up, and a lot of businesses don't have these things set up. However, these businesses that are highly structured and have a lot of donors and a lot of people watching them and are put under a magnifying glass and combed through with a fine-tooth comb, those kinds of businesses definitely would have a buy-sell agreement and these Keyman policies. And they would probably spend quite a bit of money on it Many people do use an LLC for a key man or succession planning or these buy-sell agreements. If you set up a separate entity to fund the premiums for the policy, for the life insurance policies, it is a way to prevent the key man, the key person, or any of the executives within the organization from paying income taxes on the premiums that they're getting. So if the business ABC company were to reimburse an executive for life insurance, that would be considered that would be taxed. That would be considered income and taxed. And the other reason they would do this is it centralizes the ownership of the policy. So it makes it very clear who owns the policy, and it can just make it very clean and clear when it comes down to who owns the policy, where are the policies, and who's paying for the policies. So everything is set up within the LLC, and it's pretty common practice. I don't see every business doing it this exact way, setting up an LLC to avoid these taxable incomes and the like. However, it is a way that people do fund these policies. It's completely outrageous way. People use LLCs all the time to fund all sorts of things. All right, and this leads me to just life insurance basics. So the core roles, we have the insured person, which would be the key man, the person whose life is covered. We have the policy owner, the person or entity that owns the policy and controls it. This is usually this is the one that's paying the premiums. So this would be the entity. The owner can be the insured, the spouse, a business, or even a trust. Okay, so that's the policy owner is either the insured, the key man, the beneficiary, or a company or a trust. All right, and the beneficiary can also be a person, entity, or a trust. And there's different types of beneficiaries. You can split up the amounts any which way you want. So for example, I take out a life insurance policy on myself. If I die, I want my husband to get some, and I want my brother to get some, and my mom. Okay. So how do I want that split up? I designate the percentages attributed to each of those people. So I could do 50% to my spouse, 25 to my brother, and 25 to my mom, totaling 100%. Okay, so if it's a $100,000 policy, my husband would get 50,000, my mom would get 25,000, and my brother would get 25,000. Okay, so you can split it up that way. You also have secondary or contingent beneficiaries. So let's say me, my husband, my mom, and my brother are all in a plane. The plane crashes, everybody's dead. Now where does the money go? That is what a contingent beneficiary is for. And those are often listed as well. Or in the case of a lot of these key mans, if it's an entity or a trust, kind of makes the contingent beneficiary a moot point. But just getting down to the basics of what life insurance, the basic terminology around life insurance. So you have revocable beneficiary and irrevocable. Some beneficiaries are listed that are not revocable, and that really comes down to the beneficiary's written consent of whether or not they can be revoked or not revoked. In the situation where an entity or a trust is paying for the premiums and is listing itself as a beneficiary, it may be irrevocable, and that may be built into a contract somewhere. Additional possible roles, a trustee, if a trust owns a policy or is named as a beneficiary, the trustee manages the policy, or the death proceeds for the trust's beneficiaries. Okay, so that's already predestined on who's managing that and who's getting the money. unless there's minors involved, which is a whole other can of worms. Okay, so can the beneficiary be changed at any time? Usually, yes. But if it's an irrevocable beneficiary, then no, obviously. But usually in a typical life insurance policy, the policy owner or policy holder has a legal right to set and change the beneficiary on a life insurance policy. If the insured or the owner are the same person, which is the case with most personal policies, that individual can choose the beneficiary. If a business or a trust owns the policy, such as a key person policy or buy-sell agreement, the business or trust, through its authorized signers or trustee, decides and documents the beneficiary designation. Okay. So we don't know who the beneficiary is. That's private information. Typically, it's a spouse or an estate. If the purpose of the plan, of the life insurance plan, is to help the spouse or the estate and to ensure that the spouse and the estate, or a business entity like in Keyman. Sometimes it's a trust or a combination of all the above, and we just don't know. We just don't know how these things are structured unless we're intimately involved in the process. So, if someone has a entity that okay, so let's say that we have a person who owns multiple businesses and they want to insure themselves for each and every one of those businesses. They go through the succession planning process. Let's say there's 4 businesses of which they're collecting $400,000 from each, totaling $1.6 million of income per year. All right, so there's rules of thumb out there for life insurance, Keyman. So the most common rules of thumb is many carriers and advisors advise 5 to 10 times annual compensation as a starting point for Keyman. So if someone is making, let's say, $400,000 a year, you are going to times that by 5 to 10. So that's going to be 4 million, 2 million, 2 million to 4 million just for that one person. All right. And then if there are multiple, right? So this key person may be tied to multiple companies. So let's say they're making $400,000 from 4 companies. So that's 1.6 million. 5 times 1.6 million is 8 million. Okay. And 10 times is going to be 16 million. So that is how the math works out on that piece. So in a typical situation, it would be for somebody making $1.6 million a year, they would be advised to take out anywhere from 8 million to 16 million in Keyman. And then you have to consider the buy-sell agreement on top of that and any personal objectives from the executive standpoint on what they want. So it's usually some sort of negotiation between the entities, the people employing this Keyman, and board members and executives all deciding exactly how they want this thing structured and how a buyout is going to work in case of a death. So you arrange all that ahead of time. Okay, you arrange all that ahead of time. And if that Keyman, and again, this is just a rule of thumb. Now, if the Keyman is extraordinary and extraordinarily difficult to replace, you could easily double that, So most insurance companies will, in this space, will easily insure, well, I shouldn't say easily, but a $5 million policy is not abnormal. Okay. So like, let's say a $5 million permanent policy, permanent life insurance policy. If we carry that across 4 entities, we've got $20 million. And that's just for Keyman. So we'll assume, just for clean numbers, $5 million policies over 4 entities. And doing it this way would also be very useful because it's difficult to get one big fat, $5 million, $20 million policy from one insurance company. And it would be cleaner to get a $5 million policy for each of those entities, right? Because each of those entities could assist in paying those premiums. And if that were the case, if you got 4 different entities paying 4 different premiums, you would want to pool that. That gets really confusing in accounting. So maybe you'd want all that to go to one LLC, and that one LLC would just manage that whole thing. Do you start to see why we would have a separate LLC? Okay, so if you have a separate LLC holding the premiums, paying the premiums for Keyman and buy-sell agreements, and you have multiple companies, and each of those companies should be insured for Keyman because they're each dependent on this key person. Each of those entities would be responsible for paying the premiums if they're going to benefit from the cash out, right? From the person dies, they're going to be a beneficiary, right? So each of those 4 entities would be responsible for paying for one of those policies, conceivably. And it also spreads the carrier risk out for all those policies. It's easier administration, claims processing. It's an industry standard for these larger cases. So it starts to make more sense, at least in my mind, as to why there would be a separate LLC, especially if there's multiple entities involved and a key man is responsible for multiple entities. Why permanent life insurance? Permanent life insurance in these kinds of situations with key man, you can certainly set up a term policy. I mean, it's certainly for companies that are just starting out. Cash flow is a problem. Term life is way, way cheaper than permanent. However, permanent is better. It's better coverage, especially if you have a young executive. If you have a young executive, your permanent life insurance policy premiums are based off of you at the age that you started the policy. So if you have a young executive that you want to insure, the sooner you insure them, the cheap on the permanent, not really on the term. The term resets, every 10 years or 20 years. But for permanent, if you're 29 and you got a 25-year-old executive that's responsible for $1 million within your business year, the sooner you insure that person, the less costly that premium is going to be. So you kind of want to lock it in. So the permanent policy gives you long-term stability for insurance premiums, right? Especially if you know that person's not going to leave. Like, they're probably only going to leave if they pass away because they're a founder or they're a major part of the business. Okay. No cash flow constraints. So I brought that up already. If cash flow is an issue, obviously term life, but in these larger businesses that are worth $25-50 million, it's probably not a huge deal. Okay, then you also, with permanent policies, you build up cash value, okay, which would be available for borrowing or other planning. It could be seen as a vehicle, an asset, really. It supports split dollar and executive benefits. Okay, so when an executive comes over to a new company, part of the appeal may be part of their benefits, right? And employee benefits packages do include executive benefits, and this could be seen as an additional executive benefit to encourage someone to come over to your business versus another one. right? It's appealing for an executive to know they're a part of an organization that is thinking about these long-term solutions, these long-term, what if this happens? What if that? I'm planning it out. It's not typically sold in that way, but it is part of employee benefits, and that's what I do. So I certainly have to at least note that. Real world cost example. So if you have a $5 million permanent policy, we pulled up this really quick example of what a quote would look like. And it's, a healthy male in their 30s on a permanent policy for $5 million is $1,700 to $1,800 a month, assuming that the exam goes. So with these kinds of policies, I'm sure there's a health exam, a health questionnaire, you have to get blood drawn and all that fun stuff. Okay, so as long as all that goes well, the cheapest policies for a $5 million permanent policy is $1,700. Okay. Then for $25 million of coverage, you would times that by 5, and that would be $8,500 and $9,000 a month. So if you insured each and every entity, if there's 5 entities, that's where we're getting the $25 million. Okay. Key takeaways. So a key person life insurance policy is standard business practice or buy-sell agreements, although not everybody does it, but makes sense when a business has very solid structure and a lot of structured LLCs. And it's obvious that each of the LLCs has a very specific function, yada, yada, yada. Okay. Using an LLC is legal and common for funding the premiums. Beneficiary designation is the critical piece. Okay, so we don't know who the beneficiaries are. The beneficiaries do really define what these policies are, what they're being used for, and the purpose of even having the policies to begin with. The beneficiary tells a lot. Large coverage amounts are reasonable for key employees and founders. Administrative lapses don't affect policy. So, yeah. Once the policy is set up and the premiums are paid, the life insurance company does have to pay out to the beneficiary as long as all their ducks are in a row and everything is filled out properly on the claim form. And, so anyway, that's kind of a side quest, and I can go over that in more detail. If someone has any specific questions, they can reach out to me directly. My name is Mel DeWeese. I do have a link down below. Let me show that to you. It's bennies.info. It's very simple to set up a meeting with me. You just click schedule my free consultation, and you can select a date and time on my calendar directly that could work for you. And it is a one-time free consultation with me. In the new year, I'm probably going to be adding some sort of a deposit to this. I don't necessarily. So the deposit would probably be a couple $100 just to weed out people that are not serious. And once the consultation is done, I would likely just refund the money. It's not about the money. I don't want to be making money off of consultations. That's not how I make my money. I am interested in getting leads through this source, obviously, but I'm not interested in just talking to random people on the internet. So a way for me to weed that out is to charge for the original consultation. And if the person decides to sign up with me, decides to use my services for a long term, I would probably just refund the money after that. But I may just charge for people that just want consultations, not because I want the money, just to weed out people that aren't serious. So that's something that may be coming in the next couple of months. I honestly probably don't have time for it in January. We'll see. But at some point, you may see that coming. So I'll keep talking about why I'm doing it that way and just be totally transparent with you guys on that. Thank you for hanging out with me today. If you have any questions about life insurance, employee benefits, HR, you want me to help point you in the right direction on any of it, I'm happy to help. I'm at Melissa at nomad.insgrp.com. That's MELISSA at nomad, spelled with a K, like knowledge, KNOMAD.insgrp.com. And I will see you next time. Thank you for hanging out to the end. Bye bye.